But from the frontliners, SAIL is a stock that's been in action for a long time. S.K. Rungta joins in to talk about the FPO plans for the company. Mr. Rungta, morning. Could you just update us, sir, on what the final word is from the cabinet? How much will be put up for sale, whether it will all be an FPO and how it will be split up?
Well, the plan remains the same, that there will be an FPO of 10% of the equity in two tranches of 5% each, combined with divestment of 10% in similar two tranches of 5% each. But that's the in principle plan, and final cabinet approval is still awaited.
Morning, Mr. Rungta. Once this approval comes in, the first tranche, 5% plus 5%, government offer of sale plus sale raising equity, do you think it should happen in January to March in that quarter? And how much would SAIL be looking to raise through that 5% offering for itself?
Well, I can't commit on the timelines, but we will move ahead with the process. As soon as the cabinet approval comes, we are ready with the process. But there are statutory and other approvals needed, and it might happen or may not happen, depends when the cabinet approval will come. And well, 5%, well, we have not decided on the price, but it's approximately 5% of this at current prices comes to approximately 4,000 crores for sale.
What would SAIL do with this 4,000 crores, Mr. Rungta? Why does it need this money? I mean, now 4,000 and the next tranche 4,000 plus more. So you're talking about raising 8 to 9,000 crores of equity. Why do you need this?
Well, we are in the process of modernization and expansion, which involves an expenditure of about 60,000 crores over the next 3 to 4 years. Since our modernization expansion began in 2006-07, and in 5 to 6 year time frame, the expenditure involved is about 60,000 crores. So we are proposing to raise about 50% of it through debt, and 50% has to come through internal accruals and equity portion. So it will go towards our capex plans.
Just for FY10 itself, Mr. Rungta, you have nearly a 10,000 crore capex plan. So all the money that will be raised via the FPO will be ploughed into this capex?
Well, FY10, I suppose we will have to depend upon our present accruals and our internal accruals. And we have already spent more than 6,000 crores up to November. So I suppose FY10 we may not have to depend upon the FPO proceeds.
There is an expectation, Mr. Rungta, that SAIL may be looking to lower its prices, especially on flat products. Is that on the cards, sir? And what kind of price cut would you be considering right now?
No, I suppose for flat products we have lowered our prices for the last 2 to 3 months. We lowered our prices in October, then again in November. And marginal reduction we have effected from 1st of December. I don't think so there is any justification in expecting any further lowering of prices. In fact, prices globally have started moving up, especially in Chinese market and Chinese export prices. And I feel that flat product prices domestically have hit the bottom, and from now on they should start improving a bit.
What about long products, Mr. Rungta? Any chances of prices improving out there? Because your view has been that long product prices may have bottomed out.
Yeah, long product prices also are, have come down quite a bit in the last 4 months. And in fact, for the secondary producers, the price levels are not viable. And as a result, we are finding that number of secondary producers have cut down on their production or are shutting down. And globally, prices of billets and rebars have also moved up in last 3-4 weeks. So here onward for long product prices also there should be some improvement. But the factor to be considered here is that there is an adequate supply of long products as compared to demand. And lot will depend upon what happens to the infrastructure sector and how fast infrastructure sector gets going. If that happens, then the demand will pick up, and that should have a healthy influence on the positive side on the prices as well.
Just a quick word on your capacity addition. I mean, just to translate that into the kind of volume growth that SAIL might see over the next couple of years. Are you confident that SAIL's capacity will move from 13 million tons currently to 20 million tons over the next two fiscal years, fiscal year 11 and fiscal year 12? Do you think you will be able to execute that?
No, fiscal year 11, our capacity addition is not planned, but certainly we'll move up in fiscal year 12 and part of it in fiscal year 13. Means our whole current capacity expansion plan should be on stream by December 2012. That is by fiscal year 12-13. So it will be, capacity addition will be progressively taking place fiscal year 12, fiscal year 13, and to some extent in fiscal year 11.
Globally, Mr. Rungta, what's 2010 looking like as a year for steel prices? Because you've had a pretty good run this year. Internationally, do you expect prices to remain in this range or soften out a bit?
I think prices had softened quite a bit in October, November, and from those low levels, prices have improved a bit, especially from in the Chinese market, and Chinese export prices have also moved up. The factor to be considered is that the raw material prices are not moving down. In fact, iron ore prices as well as coking coal prices have been moving up for the last 6-7 months and have been holding steady. After some decline in iron ore prices in September, October, they have moved up again, more than $100, $110 CFR. So there is a pressure of raw material prices on the steel producers, and their margins are already very thin, especially in developed countries, because their capacity utilization is also low. So I don't see any major downward correction in the steel prices going forward. In fact, there is a case for upward revision of prices if steel companies have to carry on business with some kind of margins.
Thanks, sir, for joining in today. That's the chairman of SAIL talking about how expansion will be carried on going forward, and confirming that once the cabinet note comes in, they will move fast to make that 5% plus 5% follow-on public offer. 2% down, that stock now at 207. Move now to a